Hi, it's Mitch here from Reverse Mortgage Pros, and in this video I'm going to walk you through reverse mortgage interest, how it works, talk about rates, terms, and amortization. Let's get started. Now, if you're interested in free professional help with your reverse mortgage decision, you can hit the subscribe button below this video, hit the thumbs up button to like the video. That way, I'll know that the information I'm providing is useful to you, and you'll also get notified of new content as I produce it and new pieces of advice and articles on reverse mortgages to help you understand them a little better. So in this video, a quick overview. It can be confusing as to how interest rates and terms work with reverse mortgages. And I've also seen some confusion around whether they can go up or down while you hold them, how exactly it works. And understanding this is important before deciding on a reverse mortgage. So I'm going to explain how all of this works, how interest rates work, terms, fixed rates, variable rates, and give you an example as well that walks you through it all. Before I get to details, if you're new to reverse mortgage, I'm going to quickly explain it in 20 seconds. It's a mortgage available to homeowners 55 and over that doesn't require any monthly payments. You can get around 10 to 55% of your home's value depending on the age, property type, and location. You can take as much money as you qualify for, but any existing mortgage must be paid off first. And it's designed to help you tap into your home equity for retirement and to continue to live in your home for life. So, how do interest rates work with a reverse mortgage? So a quick overview on interest rates. A key point, and I'm probably going to mention this several times in this video, is that reverse mortgage interest rates work almost the same as every other mortgage in Canada. At the end of the day, this is still a mortgage product. They still have to follow all the mortgage rules and regulations that exist, and it works almost identically to your mortgage, with one exception, which I'll get to in a second. The interest rate is set over a term, which is usually 1 to 5 years, and within that term, the rate can be fixed or variable. Now, this is the same as a regular mortgage too, and the most common mortgage product in Canada is a 5-year fixed term. That's also the most common mortgage you can take, that people take with a reverse mortgage too. The only difference between a reverse mortgage and a normal mortgage is that you don't pay back the reverse mortgage. There's no monthly payments. So that means there's no amortization. It doesn't exist. There's no amortization schedule. Amortization simply represents the amount of a loan that is paid back over time. This loan isn't paid back. For a regular mortgage, it's usually 25 years. You can get 30, 35 years, but 25 years is the most common. So regular mortgage, 25-year amortization, and the most common is the most common. And the most common term is a 5-year fixed term. So what that would mean is that they're going to have five-year fixed terms over the course of that mortgage and paying down their home. That's a regular mortgage, and I'm going to explain how a reverse mortgage works in the rest of this video. So let's talk about terms. So for a reverse mortgage, again, almost the same as a regular mortgage. It depends on the lender. You can select a 6-month, 1-year, 2-year, 3-year, or 5-year term. And the term is basically you setting the interest for that period of time. And like I mentioned, the most popular term in Canada is a 5-year term with a fixed rate of interest. That applies to both a reverse and regular mortgage. And the rate type you choose, fixed or variable, only applies to that term. At the end of a term, you then negotiate a new term and rate with the lender, which can be higher or lower than what your previous interest rate was. And I'll give you an example and walk you through this. Then when it comes to fixed and variable, again, like any mortgage in Canada, you can choose an interest rate that is fixed or variable inside the term that you pick. A fixed rate means that exactly that. So it's fixed, it can't change for the entire term that you pick. So you pick a 5-year fixed rate, and that rate will be the interest rate you pay for 5 years. It cannot be changed. You can choose a variable rate, which is also usually on a 5-year term. So that means for the next 5 years, your interest rate is variable and linked to the Bank of Canada lending rates. It could go up or down, depending what the Bank of Canada decides to do during those 5 years. Now, a lender is obligated to tell you if they're changing their interest rate based on the Bank of Canada lending rates during that term. There is some consumer protection in here that's worth talking about. So at the renewal of a term, lenders can't just massively increase rates without justification. They can't just double your interest rate for no justification or any reason. There's actually a piece of legislation called the Interest Act, which is a federal act that limits a lender's ability to do this. and there's a government body that oversees this called the Financial Consumer Agency of Canada. On top of that, it would be a pretty big mistake by most lenders to do that because there's competition in the mortgage space and the reverse mortgage space. So you could likely just refinance to a different lender at a lower rate anyway. So needless to say, it just doesn't happen. It, it doesn't happen, it doesn't exist, and it's not allowed to happen. So there's some protection for you at the end of the term for each of your terms on a reverse mortgage. So what I'm going to do is I'm going to just give you like a brief example that explains the flow here and what would happen. So let's say you're taking a reverse mortgage today and you're looking at all the term options. You can pick a 5-year variable term, a 1, 2, 3, or 5-year fixed term. And you've looked at that and you decided to take a fixed interest rate on a 5-year term, which is the most popular choice for almost everybody. Probably around 2/3 of people would choose that, maybe even more. This means that for the next 5 years, the first 5 years of reverse mortgage, interest is going to be added to the balance that you owe at the agreed fixed rates, and that interest rate can't be changed forever. There's no possible way for the lender to change that. You are locked in for 5 years. The only way this rate would change is if you chose a variable rate instead of a fixed rate, and then the interest might go up or down as the Bank of Canada changes their rates. And it's worth noting that it can go up or down. It's equally possible. And depending on the time as I make this video, it's more likely rates probably go down in the next 5 years if that was what you happen to choose. So then what happens is 5 years have now passed and you have to renew your interest term. That interest that you picked was only the interest rate for the first 5 years. And at this point, the same term options are going to be available for you to renew into your new term. You can pick a 5-year variable, you can pick 1, 2, 3, or 5-year fix. Alternatively, at this point, you have a good opportunity to look at other lenders and see what other rates they've got and possibly refinance your reverse mortgage. So this is kind of rate shopping your reverse mortgage, same as what some people do with their regular mortgages when their term is up and they get a renewal offer from their lender. Wherever you choose now sets the rate for the new time period you picked, and the cycle repeats itself over and over again. So if you choose a 5-year fixed again, now you've got 5 more years at the new rate that you've chosen to fix in at, which could be higher or lower, and then in 5 years' time, you'll go through this again. Now, it's worth noting that there are no new added fees or anything like that. I don't believe it's legal to charge fees on a renewal. So you don't need to worry about any more setup fees, lawyer fees, legal fees, or anything like that when it comes to renewal. So in summary, the reverse mortgage terms work largely the same as every other mortgage in Canada. And again, that's worth knowing here. It's a licensed mortgage product. There's nothing fancy going on here. You'll choose either a fixed or variable rate, and then you'll have to make that decision again every 1 to 5 years, depending on what term you chose for your rates, and that dictates how long it's locked in for. Now, a couple of key points that I really want to drive home here. Rates can go up or down over time, and your reverse mortgage is probably going to move with them up or down over time. And ultimately, sometimes you're going to get a good rate for 5 years, and sometimes you're going to get a worse rate. You might actually have your rate go up for 5 years, and other times your rate will go down over 5 years. Consider this when you're making your decision. Rates will fluctuate over time. This is a medium to long-term loan. And in some ways, the rate you're being offered today is less important. What is important is what's going to happen to rates in the future and what the predictions are for where rates are going to go. And that can help you inform the likelihood you're going to pay and what rates you're going to pay are going to be added to the balance owed in the long term. So that's why I really want to drive home here in this video, is just to think about rates that way and less about what is being offered right now and what's on the table right now. Where are they going to go with rates? And that's much more important for a reverse mortgage than it is for a regular mortgage even. Now, if you're considering a reverse mortgage and you're not sure about it or you want to get the best rate, I'd be happy to give you a free reverse mortgage assessment in just 90 seconds. I'll advise you if it's a good solution, if something better works, and also where you can get the best interest rates. All it takes is 90 seconds. You can click the link in the video notes or go to reversemortgagepros.ca/assessment. That's reversemortgagepros.ca/assessment. Now, if you have any more questions or comments or something in the video that you want to ask me about, leave it in the comment section and I'll almost always answer every single comment and question personally and individually. I'll try and get round to them. It might take me a day or two, but I'll get to your questions. Otherwise, I hope you enjoyed this video. I hope you found it informative, and I hope that it helped you on your journey to deciding if a reverse mortgage is right for you. Thanks.